Hey everybody, Larry Luna here with Team Luna Homes, powered by Cross Country Mortgage and brokered by eXp Realty. And today we're going to talk about basically interest rates and more importantly and specifically LLPAs. Now, what is an LLPA? Basically, that's an acronym for loan level price adjustments. These are the risk-based lender charges that are added to the cost of a mortgage. Now, typically there could be in closing costs, they can be in the interest rate of the loan, but there are additional costs that are added in by the specific lender based on the risk assessment of the consumer. So what are those assessments and what are those risks based off of? Well, first and foremost, it's based off your credit. Obviously, the better your credit, the cheaper the interest rate. That's not a hidden fact. The next would be loan to value. In other words, how much money are you putting down? The more money you put down, the less risk it is for the lender. The less you put down, the lender carries the more risk. After that, it's the property type. What kind of property is it? Is it a single family resident home? Is it a townhome? Is it a condominium? Is it a manufactured home? Some of the more higher priced homes, the higher risk homes could be something that's attached, something that is on wheels, something that's not necessarily on a permanent foundation, but is finally mounted on a permanent foundation. So these different types of property types can contribute to the price adjustments that you'll have for that home. And then lastly, it's the loan purpose. Are you looking to purchase your primary residence? Are you looking to purchase a second home? Are you looking to refinance? Are you looking to cash out some of the equity for a refinance? Are you looking to buy an investment property? These are all different types of risk-based assessments that the lender has to determine what is the risk in terms of cost that can be added back into the rate. So that being said, what you need to know as a consumer is any consumer can take any interest rate that they want. Obviously, the better the credit score, the better the interest rate, and vice versa. However, what the consumer has to understand is that as a lender, those additional risk assessments are adjusted to the cost of the price. So that being said, you can have any interest rate that you want, but you have to understand that there is a cost for each interest rate. And those costs are based off of risk-based factors like LLPAs. So that being said, you may see that one lender rates is a little bit higher or lower than say another lender or a credit union or a bank or a direct lender or a broker. There are different types of LLPAs for different types of financial institutions that lend mortgages to consumer. And these are some things that you need to be aware of so that you can be educated on exactly not only what type of loan you're doing, but the costs that are affiliated with that loan. And more importantly, the interest rate. Now, keep in mind, interest rates are temporary. Rates change on an hourly and a daily basis. That house that you're going to live in is going to be permanent, probably somewhere between 5 to 8 years. So within 5 to 8 years, chances are you're going to refinance that if rates come down, right? If you're going to save $100, if you're going to save $200, if you're going to pay off some debt and avoid some additional interest, and you take a refinance, you're going to refinance that loan at some point in time. The chances are and the percentages show that you're going to probably do that. The home, though, is going to stay put until you actually sell it. And again, based on the national average, you're probably going to be in there somewhere between 5 and 8 years. So try not to get so fixated on the interest rate. You're going to date the rate and you're going to marry the home. So you have to keep those things kind of in perspective because the rate can always change. I hope that information was helpful for you. If you'd like to know more or maybe get a little bit more details about your specific situation and what kind of an interest rate or what type of loan program works for you, please feel free and click on the link below, schedule your no obligation one-on-one phone consultation, and we can get those questions directly answered for you. Thanks for watching. Hope you enjoyed this information, and we'll see you soon. Take care. Bye-bye.